Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 24th of June, starting off with the FTSE, and here you can see that we're trying to get back above 8,800. Questionable ceasefire in the Middle East, but what we want to see is an end-of-day close back above 8,800 to give us a potential move up to the top of that rising trend channel, the green one there from March last year, as high as 90.20. On the downside, we still have the late May support there around 8,700 as potential rug pull destination, as is the 50-day line at 86.17. But at the moment, probably just looking for 8,700 to stem any losses. We've had an RSI rebound at neutral 50, and that's still ongoing, and therefore, if it was just the technicals alone, we'd be looking for this market to go up straight from here. Moving along to the DAX, and here we have had a proper 50-day moving average rebound. In fact, it's also, with the gap to the downside, it's also a bear trap island reversal, which tends to be a very strong setup, especially when you're near the highs. So looking for a proper move back towards the top of that rising trend channel there, 24,800 by the end of the next month, while we're above the 50-day line, 23,100. In the meantime, the 23,500 area, the old March resistance, coming into play, and we'd like to see an end-of-day close above that today, accompanied by the RSI being back above neutral 50 at 52. Moving along to the Dow, and here has been about trying to keep the floor of that rising trend channel there from May last year. You can argue exactly where it is, but it's around 42,000. Key reversal to the upside yesterday. We need to break that 43,000 level, which has been neckline resistance since the end of March, and that would hopefully give us 44,000 by the end of next month. But the 50-day line still rising. I suppose the 200-day line is still rising too, so in theory we're in the run-up to a golden cross, although it's probably still 2 or 3 weeks away. The other point to note is that we've had a double RSI rebound at neutral 50 in recent days. That adds to the ones that we had back in May. So this is a situation that looks half full rather than half empty at the moment. Key is, I suppose, staying above 42,000. Moving on to Bitcoin, where one would have thought that given all the companies buying Bitcoin for their treasury strategy, this market should already be back up at $1 million, but in fact it's just still below the highs within this falling trend channel based at, with the resistance line there, 109. Need to see an end-of-day close above that to give us a move up to 125,000 at the top of that rising trend channel from March last year by the end of next month. On the downside, hoping there wouldn't be anything lower now than the 200-day line at 96,000. RSI just about back up above the neutral 50 level. So now until the rest of the week is, or should be, the time for this market to make some progress. Moving on to gold, and here you can see that we're still toying with the floor of that rising trend channel there from back in March, trying to work out exactly what it is, where it is as well, but looks as though the line roughly in the right place. Above the 50-day line at 33.20, still looking for a break of 3,400, and to take this market up to 3,800 perhaps as soon as the end of next month. But while we have those elusive end-of-day closes back above 3,400, still concerned that it's going to take a bit longer to get up to the upper 3,000s. Moving on to the stocks, and starting off with Aura, and here you can see that we've hit the obvious notional target there, the top of that broadening triangle there from the end of 2022 at 10 pence. Looking for a bit more, maybe up to 13 pence, while we're above resistance on the way down at 8 pence. That was from back at the end of 2022. Next up is Catenai, which seems to be trying to deliver a fresh move to the upside. Obviously, there's been a bit of a drag from the best levels through 0.8 pence, and we're now back at basically we went down around the 0.3 area, but 0.3 area was the old resistance, so above that, still looking for a resumption of the rally, maybe up to the top of that falling trend channel, 0.55 by the end of next month. If you're cautious, you wait for an end-of-day close through the 50-day line at 0.38. Cordel is the next, or Cordel, and here you can see that we've got a rising 50 and 200 day line pattern. We've also had an extended rebound for the shares around the neutral 50 level. Initial target here was 9 pence, but we're looking for an acceleration to the upside, accompanying the run up to a golden cross up to as high as 12 pence by the end of next month, while we're above the 50-day line around 6.5 pence. Moving along to Dialight, which made the switch from being in the red to being in the black, and we've hit off the back of that, we've hit our initial target there, 148, looking for up to 198 by the end of next month, which is the upper parallel of that rising trend channel base, while we remain above that 148 number. On to Empire Metals, which I suppose shows you how a near vertical rally happens and works out. It doesn't have to be Bitcoin strategy either. We've hit or broken our previous target there. I think that's the third or fourth one there. At 22 pence, above 22, we're looking for 33 pence by the end of, well, we were looking for it by the end of next month. The way things are going, we might even get it by the end of the week and finish off June with a high. Moving along to the situation at Gear4music rather, and here, decent update to date today, and nice push through here with the broadening triangle up to £2.50. That's what we're looking for by the end of next month, while we remain above the floor of the latest gap there, around 180. Probably tighten that up to the £2 level, given that that was the old peak for the shares back in the August-September period last week. But end of day close above £2. We're looking for £2.50. Ideally, we stay above 180 on Gear4music. Next up is a stock that's done delivered pretty good results today from Mustafa, and resuming the rally now, which was basically halved up by the sell-off that we've had since the beginning of April. But nice to see a rebound above the 200-day line at 2.3 pence, and above that we're looking for June resistance through 3.75 pence by the end of next month. On to Valyrium, which looks as though it will now not go down to 2.8 pence. Looks like we've got a turnaround here. Unfilled gap to the upside today, breaking recent neckline resistance around 4.6 pence. 4.5 pence, and also we've closed that gap there, which was around the 4.6 pence level. So a gap closed by signal and also unfilled gap off the low tends to be a decent turnaround combination. 9 pence the initial target by the end of next month, while we remain above that 4.5 pence level. On to a recap where some clever money seems to be in the stock, and been waiting for news on any American or US developments. So we've nearly approached or reached our first target there, 1.8 pence. Next target is the upper parallel of that rising trend channel base, as high as 2.75 pence. Remember, we started off here wanting the shares to stay above 0.8, and above 0.8 the prediction was 1.8. So almost did that. I think we might have just crept back. No, actually we were actually on 0.8, so that did actually work on a mid-price basis. So let's see if we can maintain the momentum and at least stay above the 1.5 pence area, which was the resistance on the way down. Finishing off with Xtract, and here you can see that we're still in this what looks to be a mid-move consolidation between 0.8 and 1.1 pence. Looking for a break of this range by the end of next month to take us at least up to 1.3, 1.4 pence by the end of July, especially with the 50 and 200 day lines now both rising and the RSI pushing above 50. That's it for me today. More updates tomorrow.